Hey everybody, this is Lance from ThetaTraders.com. This video I'm going to be doing on my iPad, testing out some new stuff here. Got my little Logitech crayon here, not sponsored by them, but wanted to draw a few charts on the iPad while I show this video. So if you like this type of format with the iPad, drawing out, please let me know in the comments down below. Appreciate all your support, like, subscribe, all that good stuff. And we're going to go over the covered strangle strategy and how we actually worked out on the trade pretty well. Actually get our target profit for the week. Not everyone got the target profit though, and I'll be helping out some members that actually did it. So let's go to MES at this point. MES in the last week had a pretty significant downturn in the last 4 days. Had 4 down days in a row. And the high recently was 4634, closed at 4498. Just remember those numbers as we look through the other data here. So, covered strangle strategy that we use. Start the covered strangle by selling 2 puts. One of them will be a little bit closer to in the money. So in this case, I sold a 45.20 put in the money. This was last week on Thursday evening, and it expired on this Friday expiration. And able to sell 1 put at 45.20 strike. Sold a second put at the 44.70 strike. Remember, when you look at the data, 44.98 is in between those strike prices. So if we didn't manage these trades, we would have been assigned on the 45.20, and then this one would have expired worthless. However, we did get out of the trade early, and we closed it near market open on Friday. This is in the Consistent Passive Profits channel that is in the new membership tier that we have. If you're still interested in joining, there are memberships available for it, and I'll leave a link in the description down below this video, where we sell covered strangles and low delta puts on MES and ES futures. So we're able to close the covered strangle at 2, able to sell it at 11.5, bought it at 2. This ends up being a 1.58% return in only 9 days. That's on $3,000 in buying power. And that's the approximate amount of buying power you would need if you got a sign on both contracts and it continued to go down a little bit. So it's a pretty conservative number that I'm using in the $3,000. We really only needed about 1,200 or so in buying power. And then the 3K is the buying power plus cash we leave on the side. I go over in a lot of detail with members how to be using your buying power effectively and safely in ThetaTraders.com. Then we did a longer dated covered strangle with members. It's a new expiration date for the MESZ. So one of the main things I want to go over is why do we close this at the 2 strike? Because again, we would have been assigned on this 45.20 because MES was a little bit below the 45.20 strike price. So here is the trading plan that I have. ThetaTraders.com members could read the full trading plan of all the future strategies I do. And I followed the strategy almost to a T, and it worked out well in this case. So for buying power, you need at least $3,000 per position. That's the BP plus the cash that you need. Total funds is about 3K if you're just doing the weekly, which is this one, about 7 to 9 days out is weekly. If we sometimes do some weekly and monthly covered strangles, so 45 or so days out, 30, 45 days, you're going to need double that or about $6,000. How do we enter these trades? Typically on Friday, we're going to sell a 7 DTE put a little bit outside the expected move. So it's a very highly probable trade, about 70-75% of the time the options will expire worthless and you'd get the full credit that you receive. And then sell another put with a premium of at least 5. The reason why we do it this way is you will save a bit on commissions than doing a normal covered strangle. Normal covered strangle, you're going to be buying a contract So buy a contract, and then you're going to sell a call against it, and also sell a new put. We're selling 2 naked puts. And the reason why we do that is there's only 2 transactions you got to do instead of 3 transactions. Save a few dollars in commissions that way. And we are entering at a pretty good price if we get a sign on our first strike, because again, we're starting a little bit outside the expected move. Key part here is why it worked out. We closed both at a 75% profit. Want to be able to take the profits when they're there. 75% profit still gives a good return. Made 1.5% in a week on this last trade. If you do that over and over again, your funds will, your account will grow very well. If you do a 30, 45 day monthly, we're going to still go outside the expected move. You could go a little further out of the money because it's further out in time. And then we typically sell the second one 100 points lower. So since we're able to close both at 75% profit, we got out of the trade completely, and we just started a new covered strangle. If we did get a sign on that first one, and I didn't do this management that I said, then we're going to sell 7 DTE, typically at the money or in the money, calls against the contract that you get assigned on. And you want to make at least 10 in premium. I typically like to go a little bit in the money so you could get a little bit of downside protection there. The MES could continue to drop a little bit and you could still end up with a better return, because if you're selling in the money, you get more premium. And because you get more premium, you have a little bit more downside protection. If you get a sign on both contracts, then we're going to sell 2 in the money calls. Again, I want to keep that downside protection. And you sell 2 in the money calls to get out of your position near a break even. We don't want the market to continue dropping on us. Could use a lot more buying power that way, and it can be hard to get out of it. So we usually go a little bit further in the money if you get a sign on both of those. So again, Covered Strangle Strategy worked out really well. If you're interested in trades like this, also do put credit spreads, 0 DTE, 3-month on SPY. We're doing some diagonals now. You're going to join the thetatraders.com. You have a free 7-day free trial, and you can check it out and see like-minded individuals. We got about 150 members so far. Appreciate all the support that we have. And just check it out and see if you want to be talking and communicating with other option sellers. Again, this is Lance from thetatraders.com. Hope everyone has a good rest of the weekend, and have a good one.